All right. Hey, everyone. Welcome to another episode of the Daily High. I'm your host, Tone Vase. We tried getting Matt McGregor on this morning, but his connection was just a little too choppy from the motel as he is moving to Japan and where his internet is going to be amazing. So on that note, this is going to be a very quick show for a quick update. Bitcoin is dropping hard, and let's go and take a look. There is, of course, more geopolitical concerns that are certainly not helping the market. Overall, I think that if a serious military conflict breaks out, it will benefit Bitcoin in the long run. Of course, I don't want the military conflict to break out just for the price of Bitcoin to go up. But in the short term, anytime there is geopolitical concerns, risky assets do drop in the beginning and they recover after. It's very similar to what happens during financial panics. So having said that, looking at the charts, this is the week of the halving. And on this halving week, we are continuing to pull back. I think once the halving is over, we will continue consolidate for a bit and then start to rise. As far as the weekly chart is concerned, we are on a third week of a 1 to 3 week pullback off of the MRI top. The ultimate low in this drop, I believe this drop should end within 4 weeks of the MRI top, and my low point of this drop is probably in the $55,000 range. So where we would hit the 50-period weekly moving average, something we have not touched since October of last year. So coming back and bouncing off the 50-week moving average is not all that bad. Let's go to the allocation chart. Well, as I stated yesterday, I was giving this a chance to go up and close us above both moving averages. The moment Bitcoin was not able to do that, remember the high for yesterday was literally $67,000. That was early afternoon. We will see it in the shorter term charts. The moment this was not able to hold in the afternoon trading hours, it would have been time to lower the position. I know we are still in a bit of a consolidation zone. We can reverse any time, but none of that matters. This is a Consensio style chart. Clearly, the mistake was getting back into the market here before the candle closed, because as the candle closed, it definitely didn't close in a strong way. And the following candle was looking good in the beginning, and then it all fell apart. I was giving it a little extra time. That extra time is no more. So even if the lows are in, again, for me, that doesn't matter. The choppy market, it is what it is. I lowered my position yesterday afternoon. I'm still trying to figure out if I will be going to Dubai tomorrow night, the next night. If I'm not going, I was supposed to be doing these streams from Dubai, and besides the geopolitical issues in the region, there's also a massive flood going on over there. They have the biggest rain in 25 years, and Dubai isn't exactly capable of handling a lot of rain because they never get any. So this position, you can put 50%. It can go as low as 25% bullish allocation. You now have two moving averages. They are both dropping. The low one, one is lower than the other. You can go as low, you can sell off up to 75%. I'm going to split the middle. I'm going to put a 33% allocation. I did not sell that much, but when the market opens today, I likely will, unless I'm seeing massive rallies. Again, to me, it doesn't matter where I put the pointer. In reality, my pointer was right as we were breaking the consolidation line. For the trolls, I'm going to put it right at current candle price. But technically, the markets don't open for another hour. So I'm going to put it like there. And I am still bullish in this market. I did my presentation at BitBlack yesterday, not yesterday, 2 days ago, about the fundamental analysis and on-chain analysis and how bullish it is. I still think we are going to new all-time highs very, very soon, but I am going to trust Consensio here. Clearly, I exited a little early. I went back in a little early. I should have just let the market play out, stayed patient. It's actually hard to stay patient in a market. I didn't make a trade for like 2 months, and I was itching to do something. That was also, you want to stay as patient as possible. Maybe not 2 months. I did exit over here and then got back in at a decent price. But yeah, so sometimes the hardest thing to do is not to trade. Matt is the day trader. I am more of a longer term swing trader. And this chart just looks ugly. We've fallen below the consolidation zone. Yes, there is a bigger consolidation zone when you look at it on the daily chart. On the daily chart, this triangle is now gone. I am going to delete it. The pullback to the moving average has happened. I'm going to delete it. I will clean up this chart. And because I want to draw something else, on the daily chart, what you have is a horizontal channel. That's what you have on the daily chart right now. This is a very, very clean horizontal channel. I will put it like this because the moment we get above this line, I will be incredibly bullish. I don't really need it to go above the all-time high. Okay. Yeah, a lot of people are saying 52K. Now, for me, there is absolutely no support until the 128-day moving average, which is sitting at 154,000. So for me, the 54, 55,000 is the real support. I mean, I hope I'm wrong with my lowering of my retirement trading position, and we go up from the bottom of this channel and break this 50-period moving average. But right now, this consolidation does not look good. We've had long-term consolidations before. Here's a pretty crappy consolidation that broke out and then broke down and then eventually broke out again and kept going higher. We could be looking at something like that. Hope you guys watched the show yesterday with Sami Loyal and Mike Williams. They're both very good traders. I know them both personally, and I'm very happy they have a show on this channel. This consolidation lasted from early December until its eventual breakout in early February. That was 2 months, 2 full months. This current consolidation started early March. So early May would be 2 months. Are we going to make it all the way back to the top of the range and break out by early May? There's a chance, but this consolidation has a way higher spread than the last one. So we will see. Not looking likely at the moment. On a short-term chart, when could you have identified that this rally is not going to amount to much? Well, it's a little bit tricky here. I'm waiting for the MRI. Oh, I know I turned off the MRI. Let's load the MRI. Also, let's take a look at Alpha Numerics. I know Matt is not here, but let's see if Alpha Numerics is saying anything. I don't see any red diamonds here. Sorry, green diamonds here, so we have to wait. The green wave is all the way down here, so plenty of time to wait. So let's go to that 4-hour chart. When did the 4-hour chart tell me that the market is in trouble? Well, on the red star candle. Unfortunately, that was kind of low, but it was on the red star candle. That is where I took. I lowered my retirement position. It was right here on this red star candle. Okay, so that's when everything kind of started to go bad. What about the 1-hour chart? I don't remember the exact time. I mean, I gave it as much time as I could. It was early afternoon, so this is a 12-hour candle, so it was around that time. On the 1-hour chart, The 1 hour chart showed us weakness earlier. Now this red star candle did not get me into panic mode. We had a red star candle a few hours earlier, similar, and it rebounded, and a red star candle before that, and it rebounded. However, right here, when this candle right here, this 10-hour mark, started to crash below the prior swing lows, that's when I kind of knew it was over, and I was reluctant to get out, but I eventually got out here on this 12-hour candle. Don't remember exactly where. I didn't care whether it was at the bottom of the candle or at the top of the candle. And hopefully I get in at a lower price this time, not at a higher price. But the only way for me to get in at a lower price is if we hit a daily MRI buy opportunity closer to the 50-period moving average. So that is kind of what I'm looking at here. It's going to be hard. I'm ready for this to be a losing trade. I'm not very optimistic that selling right here and getting a chance to buy back lower versus getting buy back higher. But I'm also not willing to risk a huge crash down into the $40,000 range. I am going to trust Consensio here. I don't like the way this is headed. I think it's very likely we're going to hit the long-term moving average sitting in the $55,000 area. The charts are just not looking good. They're looking very, very ugly. Sneak peek at the oil price. Surprisingly, the price of oil is not rising in light of the situation in the Middle East. Sneak peek at gold. Gold is actually handling this quite well. Gold did not crash like Bitcoin. This actually gives Bitcoin some hope. The daily chart of gold is still hanging in there near the top, potentially with a brand new daily high close. The MRI is coming up on a daily MRI top with the weekly chart showing us a weekly MRI top. So I would be very, very careful on gold here between the daily and weekly MRI top. Bitcoin could be leading with gold following suit. The S&P 500 weekly is also pulling back on some of this geopolitical fears. And I remain bullish in the S&P 500 overall. I'm not expecting a big crash. Maybe a pullback to the prior all-time high from 2 years ago is in the cards. Overall, I think the S&P 500 will break 6,000 and sooner than later. The correlation chart, S&P is hanging in there, which is a good sign. Let's look at the US dollar real quick. The US dollar is rallying. I remain bullish on the US dollar. I think if major conflicts break out, Middle East or East Europe or Asia, I think a lot of people will still find safety in the US dollar until the US government has been defeated by one of its many enemies around the world. And that's pretty much it for me. That's a look at all of the markets. I'm going to leave it here, keeping the video short. Hopefully Matt is back tomorrow while I hold down the fort. Please like, subscribe, sign up for the Discord. It's free. There is an educational video on how to sign up for the Discord. This summer, this channel will start providing free educational content on trading. And hopefully we put more and more traders on this channel. All right, thank you guys for watching, and I will see you all on the next one. The halving is coming soon, and the ETFs will have less liquidity to draw from. Thank you all for watching, guys, and see you all on the next one. There might be a stream on my channel later today, and there will be Twitter Spaces on the Financial Summit Twitter handle tomorrow afternoon. Spaces are back. Bye, guys. Don't forget to check out the Financial Summit in Maldives. Tickets are selling, and they're not really tickets. They're villas, and the villa you see behind me in the background is the villa where we all will be chilling in the evening. That is the picture of that villa where we're gonna enjoy life for at least a week, and everyone will have a lot of fun. All right, guys, bye.